Hi, I'm Raj Kumar, President and Editor-in-Chief at Devex. You're listening to Davos Dispatch, our special edition of This Week in Global Development. I'm here in the freezing cold, snowy ski town in Switzerland for the World Economic Forum's annual meeting. And I'm here to pull back the curtain for all of you who listen to this podcast through conversations with a number of diverse leaders from around the world on some of the most important issues facing the globe today. Listen in and let me know what you think. I'll be joined today by Samaila Zubairu, who's the president and CEO of the Africa Finance Corporation, to talk about the move that's called billions to trillions, the idea that we can somehow crowd in private sector finance at the level of trillions of dollars to solve the climate and other development challenges the world faces. I'm eager to hear from Samaila about what's working and what's possible. Nice to see you, Samaila. One of the big themes that we have been talking about, I think here at the World Economic Forum, but more broadly in the development community, is development finance. This is your area of great expertise, what you do every day. One of the big question marks is, can the multilateral development banks, especially the World Bank, now that its shareholders, like the US government and the Germans and the British and everyone else, say, we need you to reform, we need you to be much faster, work at a much higher scale, find ways to bring in huge amounts of private sector investment. One of the big questions is, can that actually work? And the Africa Finance Corporation that you lead is an example that it can, that it does. But when you look at the way the MDBs are structured, their culture, the way they currently work, what is holding us back from here to the point where we actually see the billions to trillions agenda start to play out in real life?
Very good question. And the answer to your question is yes. With partnerships and collaboration, it certainly can work. Like I was saying, and I've said to you several in the past, the Africa Finance Corporation is an example of public-private partnerships, innovative public-private partnerships with the capabilities to mobilize additional capital to work at scale, through what we do. And I'll just give you some examples just so that you know. We commissioned a wind farm in Djibouti last year, around September. It's the first independent power project in the country. It's the first renewable power plant in the country. It will provide 50% of the energy requirements of the country, and it will put them, on a good trajectory to be one of the first countries that will be entirely powered by renewable energy. The power plant there is going to replace imported energy from Ethiopia. Now, how did we bring that to life? It was a collaboration between the government of Djibouti through the Greenhorn Investment Holding Company, which is the entity that owns their ports and most of the assets in the country. We said to them that we would like to work with you to do this, and we'll do it in a partnership in which you would be a limited partner, you would be 10% shareholder, and we would put in the capital that's required to develop and de-risk the project. And we did that, starting at 90%, and as we de-risked the project, we got to stages where we could talk to partners. We invited FMO.
That's the Dutch Development Finance
Exactly,
Institution.
and they came in together with the Climate Investor One, and we sold down 39% of the entity to them. So we reduced from 90 to 51%. And together we completed the development. Together we put in place a construction finance equity bridge instrument to construct the plant, and we commissioned it. Now we have debt providers coming in, lining up to provide debt for the project.
Right, because there's revenues, you're selling electricity, and people have to pay for that, so you can easily create a bond against it.
I mean, the plant is commissioned, so there's electricity on the grid now. So people now will not be wondering if the project would happen. They can see the plant, they can see the energy flows. Of course, I must not forget to add that we got MEGA guarantee. That's an arm of the World Bank. So that shows you how the collaboration and partnerships coming together, make things work. So what do we do going forward? How do we scale up? We scale up again with partnerships, by working with institutions like ours and several others across the continent and across the global south, and having dedicated, funding lines for both equity, which is what is required to de-risk, and also for debt, and then together we can do the development that will make it attractive. We would de-risk the opportunity and make it attractive for commercial capital to flow through.
Yeah, so
once you have cash flows, commercial capital can flow through.
That's right, because then it's de-risk. We talk about this word a lot, so I just want to kind of emphasize what it means. Mm-hmm. In this case, you put up your own money.
Yes.
You said, we know we have to do some feasibility studies. We know we have to write up a power purchase agreement to make sure that if there is power, somebody will buy it at what price. We know we have to do all the legal work.
Pay for legal fees.
We got to go meet with the government. We have to make sure that they're really going to be invested. There's quite a bit of upfront work and money, yes. And someone has to be willing to risk that.
Exactly.
Because, of course, it's possible the project fails, never starts.
Yep.
So you do that upfront with your own money.
Yes.
As Africa Finance Corporation. Once you get to a certain point where it looks like this wind farm project could really work, you're able to bring in other investors, private
exactly.
and public.
Yep.
And then eventually you can start generating money through the project when the wind farm is built and sell off bonds
yes.
against the revenues that are coming in.
Exactly.
So that's sort of the perfect example, I think, of what people mean when they say billions to trillions.
Yes.
Right? You take your organization has $3 billion in capital.
Slightly above, yeah.
Slightly above.
Yeah.
But probably the biggest asset you have is that you're on the ground.
Yes.
You know that there is such a thing as Djibouti and its need for wind and its opportunity around wind. You know the government. That's a huge asset. And so you're able to find and identify these projects and bring all the pieces together. I guess the question is, the MDBs, now that they have this new lease on life, they have this new mandate from their shareholders, can they do what you're doing? Can they do it at a much higher scale, given that they have much more capital, at much faster speed, just given the urgency in the world, especially around climate? Is this actually possible?
It is possible. And just to kind of provide some context, so we've just closed the books for 2023. We're closing with total assets of 12 billion. So we've grown from 10.5 billion end of 2022 to 12.1 billion end of 2023. It shows, the growth in the business and in the opportunities. So certainly it is possible. I mean, all the multilaterals can definitely do that, but I think it will be more important for us to have partnerships. So we have a lot of frameworks. So we have the common finance
agreement
framework,
yeah.
Whereby we have most of the multilateral developments working together. We had a summit in Paris last year. We have the Africa Investment Forum, whereby the multilateral development banks and the development banks out of Europe and Saudi Arabia all work together to do projects in Africa. So all of these tools help. What is most important is for us to introduce more urgency in our approach to work. We need to really try to focus on outcomes. We need to be asking ourselves, how many megawatts have we caused to happen? How many jobs have we caused to happen? How many jobs have we created? How many kilometers of road have we built? How many ports have we built? And what will it take for us to do that?
You want some accountability in the system.
Exactly. We should all be accountable. We should be looking at what's the baseline, at a certain period of time. What are we doing to cause improvements to happen? What are we doing to improve what we met?
Are you interested in the intersection of business and social impact? Do you want to know how corporate sustainability, ESG, impact investing, and more can contribute to development finance? My name is Advas Aldinger. I'm a senior reporter at Devex, and I've been reporting on these issues for nearly a decade. I'm the author of Devex Invested, our free weekly newsletter dedicated to development finance. Every Tuesday, we explore how companies, investors, and market mechanisms are reshaping the world of development finance. Visit devex.com/newsletters and join us on Tuesdays.
So much of the conversation is still about inputs. It's just about money. You hear a lot of discussion about how big is the capital, how do you stretch to sweat the balance sheet, get more but there's a lot less discussion about these kinds of outcomes, about megawatts, children in school, literacy rates. There's much less discussion about that. And I know you're a big critic, not just of that in the multilateral system broadly, but also when it comes to the bilateral aid agencies themselves, that there needs to be a much more accountability for all the billions of dollars of taxpayer money being spent on development.
Yeah, I mean, exactly. And for me, like I said earlier, I want us to really be focused on what can we do, to accelerate development impact. And that comes with having partnerships. So what we do, I'll give you an example again. We created a company, in partnership with government, and we put in place managers, and they're focused on industrialization, focus on value chains, ecosystems, and cost and transformation. I'll give you some examples. So we started in Gabon, where we have built a Gabon Special Economic Zone. It is actually the first carbon neutral economic zone in Africa as we speak, and it was building the ports, building an industrial park, putting in place an approval and regulatory framework within the industrial park. So anybody that wants to do business in the country gets all the approvals within that space. You don't have to travel all around. Investing in upgrading the rail tracks, investing in coaches, investing in wire lines to the industrial park. And Gabon has now gone from exporting raw logs of wood to furniture, veneer, plywood, sawwood, with over 80 companies from Asia, Europe, all operating, and China, all operating within that zone. In fact, we actually have opened a showroom in the US where we're selling made in Gabon furniture. There we're able to provide the history of the wood, the tree, and how it was.
You can trace it and certify it.
Yes, you can trace it and see that it's FSC satisfied, everything. So that's an example. We've replicated that again in Benin Republic, where we're focusing on cotton, cashew, and soya. We have exported, T-shirts, to the children place in the US. Out of that, we're looking at livestock in Chad, where we're now providing livestock, within Central Africa. So there's the continental free trade is happening, because we now have livestock from Chad being consumed in Cameroon, in Gabon, and the Republic of Congo. And this is something that we can do at scale. We're also having conversations, about export to the Gulf, of the livestock, and of course we are looking at a similar project in Nigeria, at the Remo Industrial Zone, in Cote d'Ivoire as well, and in DRC and ROC, where we actually have scaled up our ambition there. There we hope to actually produce PV cells, that will be used for solar panels.
Power, yep.
Because I was saying to a group of African leaders that I was having a conversation with that, look, we need to really advocate, for more industrial activity, more value capture taking place in Africa, considering the fact that Africa has most of the minerals and metals that are required for the energy transition, and we do indeed have significant renewable energy sources, significant hydro, significant solar, significant wind, including even gas, as a transition fuel. So it can't be that we would now be importing all those solar panels into Africa. We're going to need 2 million trucks minimum for the continental free trade area to take place. It can't be that we're going to use diesel trucks. We should be thinking about using electric trucks. It can't be that all those electric trucks are now imported into Africa, adding to the emissions from the first exporting the raw materials to wherever they're produced, and then importing back the finished goods back into Africa. We should have the Airbus model, whereby each country that has a specific mineral would process it to a certain level and then we find aggregation areas, be it in Nigeria, be it in Morocco, be it in South Africa, be it in Kenya, where new car assembly hubs are emerging. We should look at that. I mean, this is long term, but if we don't have the vision today and start, we're not going to get there. So we have all the cobalt, nickel, platinum, all those minerals. We shouldn't just be exporting them raw anymore. We should make sure that we have some value addition, and then if we do the first intermediate product, and then we can improve on that, and improve on that, and improve on that, and then over some time, we can now start to have the batteries first, and then eventually the car assembly. It doesn't have to be, it can be, let's say, for trucks that we know are going to be needed. So whoever is making trucks, Volvo, should come and set up a plant in Africa. So we were doing a gold mine recently. I told them to get electric trucks, but there was none. So we have to buy typical diesel
polluting trucks.
Yep.
Yeah.
But I mean, if they were available, we would have bought it.
Yeah. What's striking to me, Samaila, is how you look at the 54 countries of Africa and you see a massive investment opportunity.
Yes.
You're looking at some of the countries you mentioned are places that if you go to your colleagues at the MDBs or bilateral aid agencies and you mention these countries, their immediate response is, oh, this is a tragic situation. This is a basket case. Some of the countries you mentioned have had recent coups, yet you're working there.
Yes.
What is the disconnect? What is it like for you when you meet with your colleagues in the West and the major donors and have discussions about these places? It seems like you're coming at this from a very different angle.
Yeah, because that's my mandate is Africa. They are looking at a broader horizon, and so they can pick and choose what works for them. But for me, I have to make Africa work. That's my job. My job is to make Africa work, irrespective of all the challenges. I tell the team all the time, and I have an amazing team. I tell them that, look, our job is to find the reason to make it work, not the reason for it not to be done. So we have to reverse it. Our job is to find reasons to make it work, and we have made it work. So how can we replicate what we have made work? What can we learn from what hasn't worked? How can we perfect that over time? And I just want to give you one example of this. So Zambia is in default. So generally the view is that everything has gone wrong there. But our projects have not failed. We continue to get repaid.
And how is that?
Because, we have properly diligenced the project to the cash flow, and the cash flow has not changed. The government is having issues, but our project is not having issues.
Right. They need whatever it is that you're providing, energy, water, power.
Exactly. And we're getting paid. In most jurisdictions, we're able to, look at the project. So I give an example. Let's say, you mentioned Sierra Leone, for example, and Liberia. Countries with significant mineral resources, but very low GDP. So if you just look at the GDP, you can't do anything in that country. But what we're saying to them and what we're trying to work with them to do is to change that. And we have a plan to change that. We can change that by first having very extensive geophysical mapping of the territory to know, with reasonable, I would say, confidence, the amount of minerals that are in that country. And then we would invest, to prove those mineral resources, and we'll create a framework whereby they can attract partners, alongside us to develop those resources. And that's how the GDP grows. But if you just look at it as it is now, I mean, war, famine, or Ebola, all these other things, you don't do anything.
I think the main pushback you would get from people is they would say governance is the big problem. Because how do we trust? Yes, these countries have mineral resources under the ground, but there's a long history of corruption. We might go in and take some risk, and then we find that the project gets nationalized or somebody comes in and tries to ask us for money from this project. And how do you bring this confident perspective to circumstances that have had, so much poor governance in the past and even currently face a lot of political uncertainty?
True. I mean, one step at a time. That's what we do. We try to create a framework where it's clear how we operate. You have to agree to how we operate. And we start with experiments. We start with pilots. And we build on that. That's what we do. We started first in Gabon. Now we're in Benin. Now we're in Togo. We're in Nigeria. We're in Chad. We're in Cote d'Ivoire. So it's one step at a time. You have to first make clear how you are going to operate, create an enclave where there can be more certainty about how to operate, reduce the risk of all of this happening by telling the government that you must locate one office with all the people that are going to provide all the permits and approval in that space, and then they do the work. So that way you eliminate that risk. So it's one step at a time. One successful model after the other.
We've got to wrap up. I've got to let you get back to this this busy meeting week. One last question for you. What do you do here at the World Economic Forum annual meeting in Davos? What kinds of meetings are you happening? Are you doing deals? Give us a sense of what it's like for you to be here.
So for us, it's just really partnerships. Finding more partners to do the work that we do.
So you're talking to investment funds, pension funds.
Exactly, and then also governments. Creating consensus. With African governments on how to look at development, how to take more ownership of development, and the examples that we need to set, the strategy that we must set and start to implement if we want the world to support us. This is a very fantastic forum to meet with people. We meet a lot of partners here. We have a lot of partners that are working to accelerate development impact together with us in Africa. This is a good forum for us to meet them. And this is a good forum for us to also make a case, for the need for Africa to be an investment proposition, bearing in mind, all the vast minerals and the significant renewable energy sources. We have the chance to produce the energy transition with the least carbon footprint. So we make that case, and we hope partners will work with us.
Well, it is always fantastic to see you, and especially to hear this perspective about opportunity and what's possible. And I think it's really refreshing. And thank you for taking a few minutes to join us for this podcast. Samaila Zubairu.
Thank you, Raj. Always a pleasure to talk to you. Always.
Thanks for listening to Davos Dispatch, a special edition of This Week in Global Development. If you enjoyed today's episode, and I sure hope you did, please share it, or you can also leave us a rating or a review. Make sure to subscribe on your favorite podcast streaming platform, and I'd love to hear what you think. Feel free to shoot me a message on social media at Raj_Devex, or send an email to podcasts@devex.com. Davos Dispatch is a podcast from Devex, and it's hosted by me, Raj Kumar. Today's episode was produced and edited by Naomi Mihara.